All right, ladies and gentlemen, can somebody, I think you can hear us because we've been kind of communicating, but someone want to just chat real quick that we can still hear us? You can still hear us, right? All right. Go Avs. Anyway, my name is Murray Bullier. I want to welcome you to How to Be a Hero as a insurance agent, how to be a hero to your clients, to get more referrals, get more income. This is a mind-blowing opportunity, and I'm glad you're here to listen to this. I think it's I think we have the cure for cancer here. So what we're going to do here is I'm going to turn the microphone over shortly to Brian Nates, who has overcome a massive personal medical emergency just to show up here. So we're really honored to have him here. Appreciate it very much, Brian. I'm going to tell a little bit about my story. If you have any questions, you can put them in the chat. We have our partner, Kathy, manning the chat, and where it's possible, she will answer questions in the chat. Those that aren't possible to answer in the chat, we will answer at the end of the presentation, okay? So just because we didn't answer it right away doesn't mean we missed it. And we want to just let the presentation flow and do the questions at the end. And there's a very powerful live demonstration that will knock your socks off. We do want to respect your time. So there's an option to, after we answer questions, that Brian will, for those that want to stay on, you're not required, obviously. But if those that want to stay on a little longer, Brian is going to do a really killer demonstration, which is demonstrate the power of the tool. It'll give you a visual idea of what we're talking about. So with that being said, I'm going to lead off with a little bit about my story, and then I'm going to hand it over. So I have a long corporate career as a operational finance manager and cost accounting. I don't know if you know what cost accounting is, but I worked at 3 different Fortune 500 companies. My job was to reduce the cost of goods sold line on a P&L. You've got sales, you've got cost of goods sold. We had all kinds of high-tech stuff. It was semiconductors. This is high-tech manufacturing, cutting-edge stuff. We saved hundreds of millions of dollars. Not me, my team. But the reason I'm telling you this is not to brag, but to share with you that I did not know how mortgage interest is calculated. And it turns out a lot of people don't know what mortgage interest, how mortgage interest is calculated, including people in the mortgage industry. The point here is that there's a lot of things that people don't know about finances, about interest rates, and about debt. And I am very fortunate that I stumbled upon Brian and his partner, Mike Breshears, who's also on this call, who shared with me this program. I had refinanced my house 3 times. I've been living here 25 years. And every time I refinanced, I was looking at getting a lower payment, but I didn't understand the repercussions of that. And once I retired from my corporate gig, I looked at it from a different angle now. When am I going to pay this mortgage off? And I'm not going to pay it off until I'm 80 years old. And that was like the low point in my career because I did not know how mortgage was calculated, mortgage interest. So I am so blessed to have this program. We're gonna talk more in detail, but suffice to say, I'm a huge client, a huge fan. I'm a client. I'm projected to save $110,000 of interest without changing my lifestyle through the use of this program we're going to talk about. And Brian is going to not only talk about the program, but he's going to wrap it into how, if you are an insurance agent, this is a layup, and how you can really provide some massive value to your client. So keep your antenna up for that. And I'm going to hand it over to Brian, who's been Brian Nates. We're glad to have him here. Very fortunate. I'm lucky. We're lucky to work with him. He's been with the company at least 15 years. He is the leading sales guy in the company, and he's even better. I think he's the leading trainer. He really is the most passionate guy about this, even more passionate than me. He has a unique ability to dissect complicated things and break them down into simple concepts. And so I'm very proud to, he's a senior member of the company. He's an equity partner. So without further ado, and he has a massive, I should add, he's got a massive background in various financial services, which makes him the exactly right guy to share this story. So with that, take it away, Brian.
Appreciate you. Thank you, Murray. Yeah, I love what this program can do, but tonight we'll get into that. But really, it's about you all. Everyone on this call, thank you on a Thursday evening, taking the time to hear about this. And I hope that it brings value to you. I hope that it allows you to see what I've been able to do and make a difference and an impact in a culture and in a community that needs it, right? So I'm going to start off with just sharing my screen. I'm going to start with a little video just to kind of set, some of you have seen this video before, but just to kind of set the tone of where we're going with this. Okay, so stick with me on that. And then we're going to talk about a way, you know, the way Murray just said a layup. Yes, a layup. If you do this the right way, which I'm going to show you how it turns into insurance business, which is what you guys are here for. Let's talk through that tonight and have a conversation. Okay, I think that you'll like what you see, but please, by all means, write down your questions, save those questions. We'll have some Q&A at the end. And then after that, I will do a demonstration, a specific one, and we'll go from there. But let's get started. So I'm going to share my screen and just go through it, a little video real quick, just to kind of, again, set the tone, right? All right. I don't know about you all. That just gets me every single time. So let's just dive in. Why would I even be showing that, right? There's a reason. Debt is crushing our families. Debt is getting in the way of so much. This is a life insurance call. This is a financial services type of call. Why would I be talking about that? Because the very debt and taxes, of course, too, you, as you all know that, those are in life insurance and financial services, are crushing people. What we have figured out, and I'm in the same line of work of you all that are on this call, we have found a way to strategically make a very tangible, real impact and difference for people, to open up so many doors for conversations that it has almost tripled my business. Now, I am a equity shareholder of this company, United Financial Freedom, but I also have my own financial services firm. I do life insurance, annuities, right, retirement planning. This program, if set up the right way for you, could really make it a big difference for your clients, for your prospecting, and obviously for your life insurance business. So let's just dive in. The whole idea of this is we hope you see enough that you want to come up and be a part of this and utilize this program to make a difference for your clients. So why would we do this? The name of the program is called the Money Max Account by United Financial Freedom. It has been proven already. We have agents on this call that I may call on later to just share what it's done for their business. But it will absolutely triple your opportunities and should double your life insurance production. Why in the world would I make that claim? Well, this is what we're seeing. You probably can feel the pain that I'm about to share with you, okay? People are scared, right? Inflation, the market, what am I gonna do? Am I gonna have to work 10 more years? Like, people are just scared. They are looking for a solution. They don't know if there is even one, yet it's their very debt that is crushing them, right? They're scared. Their debt and taxes are crushing them. They hope you can help when you're reaching out to them to try to talk to them about what every other, by the way, financial services person is talking to them about. What makes you different? What can you talk to them about that other people aren't? They need help. The very people we're prospecting need help staying on track. They also want something simple, not too complicated, easy to follow, duplicatable for themselves, for their spouse, something repeatable, right? So if you had something like that, do you think that you could open up more conversations? And I'm going to give you some kind of hints right here. Why do I say this is an easy intro for prospecting? Because that's what this is about tonight, okay? I want you to ask yourself these simple questions, and I'm going to show you them in a minute here. But I don't want you to see, what do I want as the agent or as the representative? What do your clients want? What are your clients wanting from you? Okay, so when you ask yourself that, if your clients could create additional discretionary income faster than they ever thought possible, but without having to change their budget or lifestyle, would you want to be the one to show them how? Here's another question. If clients actually had a technology, and I'll explain what I mean by that, that would keep them on track in real time to the very goals and pursuits that you designed for them, for their legacies, etc., would you actually want them using it? And lastly, if there really was a system to eliminate most of the interest in your clients' lives, pay off all their debts, even a mortgage, in as little as 5 to 7 years without refinancing, without changing their lifestyles, would you want to learn more about that? So if you're not saying heck yes to all three of those questions, you probably don't have to be on this call anymore. Because the conversations that start from this, again, I want you to imagine you were talking to a new client, an old client, someone you're prospecting, just having a conversation with. Even if you have marketing systems and lead funnels and things, which we do have for our agents, by the way. But if there was a way that you could say to someone, hey, quick question. If there was a way you can eliminate most of the interest in your life, pay off all your debts, even that brand new mortgage you just got, in as little as 5 to 7 years, without having to refinance or change your life, would you want to learn more about that? Now, I'm not asking you, would they believe you yet? And it's probably some of you on this call that don't believe me saying that. The question is, do you think they would say, yes, I'll have some interest? And then all you have to do is show them what it is and why it works and prove that it's what you're saying. Do you think that would get you more attention? Do you think that would open up a prospecting funnel for you? I'm telling you it does. And if you can help them do that, and you can help them eliminate their debts faster and create more discretionary income faster, you are their hero. You are the person that in this day and age, when people are scared and inflation is crazy and interest rates and everything that's happening, and you have a solution that they can really make an impact for their life, I promise you got a new client and referrals coming to you. So let's get deeper into this. What does it bring? Well, I already mentioned it, but it really does create a lot of opportunities. It gives you a strategic advantage. It keeps your clients on track. I'm going to explain how. And it's just going to create this really good, solid, I'll say, lead funnel for what you do. In no way should you stop doing what you're doing. I haven't. But this program has opened up this massive wave of people coming to me for this, which turns into more business for my insurance. So why would we even focus on the debt market? It's an endless market. Hey, my friend Paul helped me create this slide, so he's going to be laughing right now, right? It's an easy market to prospect in, the easiest market to become a trusted advisor. I promise, if you show somebody how they can eliminate their interest and pay off all their debts and create more discretionary income, you have their attention, because that's solving the pain that they're feeling. Debt and taxes crush people. We know that in this industry. What are we doing about it? Right? There's plenty of retirement strategies and tax-free strategies. What are you doing about the very pain that they want you to solve, which is their debt payments every single month? They probably want to do some of your strategies that you're trying to teach them and trying to incorporate for them. I'm going to share one tonight that I do a lot with clients that helps this program actually. But if they don't have the money to do it, or very little discretionary money, they may love your strategy all day long. How can they implement it? So if you can eliminate that debt, probably will turn into more clients, right? And more premiums or more business for you. People, and this is the WIIFM, right? What's in it for me? People want a solution. They want to be impacted, something quantifiable, something they can understand and see. They love winning outcomes. They love, great companies and partners. That's us, right? A very unique solution. There's plenty of people in the debt space because the debt space works. Not with what we have, which is awesome. And what's cool is that you actually have a solution, even if they don't get any insurance from you. I want to repeat that. Even if they don't get any insurance from you, you have a solution that you can earn commissions on. That's a winning combination. Okay. So what's actually really missing? Well, no one has the system. And what do I mean by that? I'll explain. No one has the time to do it on their own, right? You want 25 different Excel spreadsheets to try to figure things out. It's complicated, it's complex, and no real strategy. And what do I mean by that? Guys, girls, there's the debt roll down, the Dave Ramsey. There's a debt stacking, debt avalanche, infinite banking, velocity banking. Which one's right? Well, what if you had a system, and I hope you're hearing me here. What if you had a system that combined all of the strategies into one unique platform that literally gave the client the perfect mathematical solution that was forever changing based on their cash flow and expenses? Pay attention to that, okay? We do have that answer. It is called the Money Max account. It is an impeccable client-facing tool. Some of you on this call, if you've been in the industry a while, you may see what this is a software, okay? It's a web-based software. It's a platform, but it's a client-facing platform. There's a lot of tools out there, a lot of budget tools, and for advisors, a lot of illustration tools or different softwares that you can plan things out, and you can put a plan together for your clients. This is a client-facing tool. The best way I can describe this, and yeah, everything on this page is true. No change to their budget, not a debt consolidation. They're not refinancing. They're not making biweekly payments. It's just a perfect mathematical solution that's forever changing. And the best way I can describe this, okay, and I'll get to this in a minute. The best way I can describe this, it is like a GPS system for your cash flow and finances. Somebody drove today, I promise you, you all have driven, and you all use a GPS system. Why do you use a GPS system, whether it's the Waze app on your phone or the GPS in the car or your iMap. Why do you Google Maps, whatever? Why do you use a GPS system when you can go to 7-Eleven, you can buy a map and you can figure out how to get somewhere? Well, that's not very good, is it? Because if there's a road out or the bridge goes out or there's a bad accident, or nowadays with the Waze app, I even know if there's an accident 3 miles up and it will reroute me around, right? It's technology. And the reason why technology is so important, a GPS system recalculates. I make a wrong turn, recalculates my path. It's forever understanding where I was, there's a satellite following me, and where my destination is going to be. And no matter how many different turns I make, even if I think I know a shortcut and I wind up not going the right way, my system recalculates my path to my destination. I want to program somewhere to stop, maybe get something to eat, a Mexican restaurant that I've always wanted to go to on my way to, I live in Indiana, so on my way to Florida. And it shows me, yeah, you can put that in your destination for a stop along the way, but it tells me I just added 2.5 hours to my trip. Do I want to do that? I may or may not. But isn't it nice to know that that's how it's going to affect me before I make the decision to do it? That's what we have, but for our cash flow. And it's using specific strategies built into it to eliminate as much interest as possible, hit every goal that we're wanting to hit as a client from using the system without affecting our cash flow or our lifestyle, using the rules of certain accounts, which you are all insurance agents. So I'm going to hit on something that you're going to hopefully understand. There's very strategic ways to use the rules of the way interest is mathematically calculated. And what we do with this is all of our clients, they all have different types of debts. They have different types of accounts. They have checking, savings, etc. Credit cards, lines of credit, mortgages, and it's going to mathematically give them the perfect step that's always changing to keep them on the fastest path to their destination. Now, that being said, for those of you that are in the financial services space, you probably know the name of this company, one of the largest financial firms in the world. Every year they give out an award. The creators of this system, good friends of mine, John and Skylar Whitman, John Waschenko and Skylar Whitman, they created this, the first version of this in 2000. They did a test market in 2004, but released it publicly in 2006 to the masses. And it just they're on version 6, almost version 7 now. And it just keeps getting better and better and better. But for credibility purposes, I do think this is important. Okay. And so when you win an award like this, now we have 80,000 clients plus, over almost 2.4 billion in debt has been eliminated. So forgive me when I say we know this program works. It's a matter of, does it make sense for you? Does it make sense for your business model? Does it make sense for your clients? Because we know it works. Now, there's people on this call that may be analytical and want to understand how it works more, okay, which I'll get into in a little bit. But the program is impeccable and proven, and plenty of write-ups have been on it as well. So how do you even get to use this program? This is where I hope, as a financial service professional, especially those in the life insurance space, pay attention. Because I want you to think what this can do to help you get more business on what you do. Plus, you do get rewarded and paid for clients that come onto this program, okay? But watch this. You need a checking account and what we label as an offset account. Now, it can be a savings account. That's fine. A lot of our clients get started that way. It could be a line of credit, which I'll explain in a minute, but it could also be a cash value life insurance contract. Now, is there anyone on this call that can set up a good cash value life insurance contract for their client? Anybody on this call that maybe know the infinite banking concept, right? Or becoming your own banker, your family bank, right? There's many different names for the concept and the strategy. We developed a system and a formula that if you want to set that up as the cash value, as the offset account to maximize every penny to eliminate debt and build wealth simultaneously with the same cash flow and the same dollars. And those that understand infinite banking absolutely know what I'm talking about here. If you could set that up for the client, oh my goodness, what a win you just gave yourself and them. And you have the tool to make sure they stay on track, they maximize it, they set up the right kind of policies with your help, and they do it. They crush their interest, and they start becoming their own bank in the process. And they eliminate their debt, and all of it in as little as 5 to 7 years. That's awesome. Okay, so all debt can be eliminated, and you're the hero. So how does it work again? I put this little, iPhone GPS there on purpose because I want you to visualize how it absolutely keeps changing. And you notice it even says, what are your route options? The fastest or the safest, right? That's kind of neat. Well, what if you had a mathematical, when you switch your GPS from the street view, from the map view, which is what you're seeing here, to the street view, which is where you see it line by line. And when you make a turn, the top falls off, right? The top street falls off because the next step is coming. If you had that for the perfect mathematical solution that is always recalculating and reallocating your steps based on your income changing, your expenses always change every month, especially with inflation, right? All these things that are going on, what if you had the perfect tool to guide your clients to hit the goals that you wanted them to hit? Not only that, what happens when they go off track? And I mean that wholeheartedly, because life happens, things come up. I used to be Dave Ramsey, a coach for, did groups and stuff. And the teachings are sound, right? Live like nobody else now so you can live like nobody else later, and start your savings and get out of debt. And, all that stuff is fine. Eat beans and rice, right? Until you get out of debt. And our clients can do it without changing their lifestyle. And what's so neat is when things come up, especially, when they want to buy that new car, they want to buy that new boat, they want to go on that trip, we have a perfect tool that keeps them focused on their goals. And they get to see, just like a GPS in a car, they get to see the cause and effect of those decisions before they even have to make the decision to do it. So they can tell if it makes sense for them to do it. Again, vacations, holiday spend, tax returns. Investment property owners love this program because how you can forecast and portfolio plan, even for properties you don't even have yet. And you can plan accordingly based on how it's going to affect your overall vision and goal. And it's mathematically perfect. All right. They spent $20 million developing this. They hired an engineer from GE Aeronautics, and some mathematicians, programmers, and they went to work. And what they developed is life-changing for the clients that are using it. Strategies are great. Knowledge is awesome. You all have strategies and knowledge. It's the execution of those strategies and knowledge and making sure your client stays focused on that execution. Well, if they have a GPS driving down the road and they make a wrong turn and it just recalculates and gets them back on track, wouldn't you want that for their cash flow, their expenses, for your goals that you're trying to hit for them? So how does this all work, right? It literally keeps them on track. Formulas actually matters. Where it says timing matters in red there, algorithms matter. What do I mean? Well, do they get paid weekly, bi-weekly, once a month, twice a month? Do they get paid quarterly bonuses? Do they have a bunch of investment properties and they have taxes they have to pay? Do they have something they want to program? Maybe 2 years from now, they need a new roof and they know they're going to need a new basement floor. And, there's all these things, right? If you can time it perfectly, you absolutely, even for those people, there are people maybe even on this call that are saying, I don't want to pay off all my debt. Like I want to leverage my debt, right? To build more wealth or build more cash flow. Okay. So even if that was the sake, you would still want to minimize as much interest as you can based on the goals you have, right? And you would still want to understand what those goals look like from the long holistic view. That's what we built. And that's what our clients are using it for. It's awesome. So it looks at your entire cash flow. It looks at your checking accounts, your savings accounts, your credit cards, and your lines of credit, even cash value, accumulation accounts, okay? Looks at frequency, timing, the due dates matter. The type of accounts matter. To a mathematical engine, the type of accounts matter. We're making sure that every penny is either earning interest or canceling interest. Within the system itself, it's looking at everything holistically. All your closed-end loans, your interest accumulation, your mortgage amortization, interest cancellation, open-ended lines. What's the difference between open-ended credit lines and closed-end mortgages and closed-end student loans and closed-end? There's all these different things. There's ways to actually float and leverage. That thing in red, number 7, offset accounts, is where you all come in. That's why I highlighted it. Of course, strategic debt payoff and the velocity of money is so important. Money is always moving. The banks understand that. Insurance companies understand that. So why don't we get our clients to understand that and take advantage of it? So when I say offset account, for those that follow Infinite Banking, Becoming Your Own Banker, Nelson Nash, this little chart you probably have seen many, many, many times, okay? We have set this up so no matter which one of these your clients are, we can help. That is the beauty of an algorithm, okay? So many of our clients will start with a savings account. That's fine. But some will actually use what's called a home equity line of credit, or a personal line of credit, a business line of credit. And then of course, many will use some sort of infinite banking or cash value account to eliminate the debt, right? That's what this is all about, and build wealth simultaneously at the same time. Again, the strategy, a lot of you may know, it's the implementation and the timing that we can perfect for them. And if you know that strategy and you can show them a tool that will maximize that, oh my goodness, you can make such a major impact and difference for them, okay? So what is the best offset account? Well, it's a cash value life insurance contract, right? It's earning that interest while also having use and control of that money. If the offset account could be a savings account, and you know a way to develop a better savings vehicle, and for anyone on this call that doesn't understand that, please learn that knowledge. In the life insurance space, you have an unbelievable tool. We just took it and put that all on steroids, okay? So cash value life insurance has the features to be an amazing offset account. But why do I say what I'm saying? Let me check my time. Okay, great. Why do I say what I'm saying? I want to go through some math, and I hope I have your attention. This is a normal mortgage, 3%, 30 years, $370,000 mortgage. This is their payment, guys. $1,560. Now, you don't have to use a mortgage, but I think it's important to see this because our clients don't get this. Right? Now, that's just the principal and interest payment. 30 years, 3%, free money, right? 3%, you got free money. Well, please pay attention. $925 going to interest and $635 going to principal. How's that 3%? Sounds like 60% of the payment went to interest. Now, I know some of you say, no, Brian, it's a mortgage and it's a 30-year note and the way they calculate. Yeah. Have you ever looked at the formula and how they calculate the amortization? That formula in itself is very confusing, right? And here's the truth. It is a 3% loan. It is. But the problem is, if you stay in this loan 30 years, then yes, it's a 3% amortized loan. See, the banks know data, and they know the average consumer stays in this mortgage 5, 6, 7 years. I think it's 6 point something years, right? So let's say 5 to 7 years. And if that's the case, well, then month 2 doesn't get much better, right? Month 3, month 4, and so on. At the end of 6 months, this client paid almost 10 grand. 5,500 of it went to interest. 3,800 of it went to the principal. So in any other realm, I want you to put on your financial services hat for a minute. In any other realm, if I was your financial advisor even, and I said to you, hey, for the next 6 months, I have this great investment I want to do with you. I want you to give me $9,360. Oh, but don't worry. My fee for doing this with you is $55.26. And don't you worry. The $38.34 will go to the principal of this investment we're going to do. Would you hire me? Now, I know we don't think about interest like that, like mortgage interest, because it's a great rate, great payment. We're so conditioned to focus on rate and payment, rate and payment. And what a great rate you got on that note. But the reality, the interest is crushing us, because we would never do that deal. But with our mortgage debt and other types of debts, student loans even, etc., all amortized debts, we just kind of accept it as normal, right? And so that doesn't sound like a 3% note. And especially this, if you stay in this loan for only 5, 6, 7 years, and then what do? You either move or you refinance. And if you do that, there's a reason why the word mortgage, mortuary, mortician, the Latin mort means death, and the Latin gage, G-A-G-E, means to take a pledge. And the very loan schedule they give you, it's got that word mort in there again, right? Right there, mort, death. Because when you stay in that loan, and then 5, 6, 7 years later, you want that lower rate and that lower payment, you just start the cycle of that front loading of interest all over again. So please help me understand, when do you really get to like 3%? Do the math, do the real math, not the bank's amortized math. So what if you can eliminate most of that interest, right? And by the way, just to prove a point, this is a real client. There's something called the T.I.P, which stands for total interest percentage. They sent me this after I showed them the truth. This is their rate, 2.659. Please pay attention. That's their rate. But the bank has to disclose on their truth in lending disclosure, on the documents, the real volume of interest. Read it. The total amount of interest that you will pay over the loan term as a percentage of your loan amount. That's not good, right? We wouldn't do that with anything else. So why are we doing it with debt? Well, very simply, a lot of clients don't know there's a better way. The only thing they can think of is, if I pay extra every month, if I try to figure out a way to get out of debt, I'll try to do it. But what if you had a solution that literally changed their life and got them debt-free as quickly as they possibly can, using the rules of the way interest itself is mathematically calculated? So again, this is where you come in. Is it smart to take out a 10% loan to pay off a 3% debt? Why in the world would I say that? And I'm going to stop for a minute. This is literally where the GPS system for your finances will mathematically put you on the perfect path to use the rules of the accounts the client has and take advantage of that, of the way interest itself is mathematically calculated, how it's actually calculated, not just rate and payment, rate and payment. Now, this is just an example, but it's the same mortgage, okay? So you know how horrible the front loading is. And most of our clients will start with a savings account. So let me say that. And you can still do this. But some of our clients take it a step further, and some of them have different vehicles, one that you can set up for them. And in this example, I'm going to say, is it smart to take out a 10% loan to pay off a 3% debt? Most people will say, no way. Why in the world would I ever do that? 10% is worse than 3. The real answer is you don't know, because you don't know what type of 10% that is. And I mean that. Is it a loan? Is it a line of credit? Is it a revolving credit card? Right? What is it? The truth is, you need more data to understand, because the way interest is calculated, mathematically speaking, matters. And it certainly matters to a system and a formula and an algorithm that's always recalculating the fastest path to zero using the cash flow you already have and the accounts you already have. So this is John and Rebecca Jones. They make $7,000 a month. They spend $6,900. Okay, sample client. And they're using the Money Max account. Now, if you notice, this over here says bank. It also says cash value life insurance. Either way, it can work. Even with a savings account, this could work. But for this purpose, we're going to pretend it's some sort of 10% line of credit, or even a cash value life that you can borrow from, right? Which is 10% high for that, and I know that, but I want to make it extreme. And so let's just say it's a line of credit of some sort, right? Which again, you could use a cash value life like a line of credit too. So I want you to understand the math of this. John and Rebecca Jones are saying, yeah, we want to do this. We're going to get on the Money Max. And today is June 30th. So timing matters. Has anyone ever used a credit card and they bought some things, but you paid it off before that billing cycle hit? And if you're saying, yeah, I've done that before, you probably recognize you actually don't get charged any interest for doing that because you paid it off before the revolving credit line hit for that billing cycle. Well, if you could do that for some groceries or buying some clothes or whatever, why can't timing and cash flow maximize you to eliminate debt and eliminate interest as well, if used properly? And if you had a mathematical formula, a software to do that for you and always changing as your life changes to keep you on target and keep you on path, that would be a wonderful thing, right? So this client on June 30th, remember they make $7,000 and they spend $6,900. On June 30th, and I'm just using that as an example because that's today, they say, hey, wait a second. Go ahead and borrow $31.99 at 10%. For this month, that interest is $26. If they never pay it off, it's a line of credit. So the way interest is mathematically calculated is completely different on a line of credit or even a cash value life contract, which is what you guys are wanting to set up for clients. Totally different than the way it's calculated on a mortgage, completely. So why would you do that? Well, if you borrow $31.99, this is John and Rebecca Jones now, remember they make $7,000, they spend $6,900, and you sent it to principal of that loan. I want to stop there for a minute. Did their lifestyle change? No. Did they go into more debt? Because that's what sometimes people think right away. No, they did not. They strategically, at a perfect moment in time, changed where a small sliver of their debt stayed. Maybe it's a loan from the cash value life, maybe it's a line of credit, maybe it's a credit card, right? 10%. And why would they ever do that? If you understand mathematically the way interest is calculated, a lot of clients don't know this. A lot of mortgage professionals don't even know this. Well, when you do that to the principal and you pay that extra payment, by the way, next month's payment is still due, okay? Because this is an extra principal payment. But what you just did with that one move is you canceled this month of interest, this month of interest, this month of interest, this month, and this month. You literally jumped ahead in the loan 5 months. So next month's payment is not for October. It is for March. You took time off the back of the loan. You took the interest off the front of the loan. And that is an aha moment for a lot of people. And you paid $26 that month to do it. So would you reach through the screen, give me $26, and I'll take $4,600 off the interest off your credit, off your mortgage right away, and take 5 months of mortgage payments? Of course you would. And if you're saying no, you just don't believe me yet. Okay. Now, some of you are saying, whoa, 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 Brian, wait a second. You're just robbing Peter to pay Paul here. Absolutely. Because Peter charges me less interest. Mathematically, it is perfectly sound. I just have a software that is making sure every penny is mathematically perfect. And when my life changes, which is every day, right? We spend more money on groceries this week than last week. etc. It's just reallocating and recalculating my path based on my income, my expenses. It's my whole economy with the perfect GPS system to make sure I'm staying on path to what I want to accomplish, which is maybe build more wealth. Maybe it's not even debt elimination, but this has a real powerful move. So I wanted to show that to you all. Okay. Now, one of you is, or maybe more than one, is also saying, boy, Brian, but you still owe that money on the line of credit. Yeah, you owed that money, silly. Well, I owe that money down to my cash value life contract. Yes, of course you do. And for those that understand cash value life also, you actually don't have to pay it back. Now, it doesn't mean you shouldn't, but you don't have to if you didn't want to. How powerful is that for the clients, right? And even if they never paid this back, $31.99, just this one move, when it doesn't make sense is when this interest, which is $320 a year equals $4,600. Just so you know, that's 14.75 years. They'll be debt-free way before that. Our average client is going to be completely debt-free, mortgage-free, credit card-free, everything free, car payments, student loans. Average client, 7-8 years. Average client saving over $150,000 in interest. Do you think you could be a hero for them if you're the one that shared this with them? Of course you can. So I want to show you a sample client. 37, 35 years old, couple kids. This is their income. That's their debt payments. Some of you may do infinite banking already. And that's why I wanted to show you this, because you're in the insurance space. When I say IBC policy, that means infinite banking concept, okay? The becoming your own banker, your family bank model, right? And this is this client. And if they do this, not bad, right? $625 a month going into the policy. They'll be debt-free in 7.8 years. Really great. Having $1 million in their cash value at age 67, that's awesome. The same exact client doing that strategy, but also now bringing in the money max account system, income, expenses, their frequency, everything is connected. Their discretionary income, every penny is getting used for them to make the fastest path to what their goals are. Same exact client, instead of 7.8 years, they're now debt-free in 4.9 years. And more cash value at 67, tax-free. And because you're freeing up discretionary income for them, why couldn't you start another policy, right? If you're freeing up discretionary income faster, why in the world could you not get them another policy? And this is how. When you run the analysis for the client and they start using it, there's all these debts that these people have. And they're going to be debt-free in 4.9 years. They're going to save almost $170,000 in interest. And when you can find right there, look, auto payment, furniture loan, Discover, medical loan, Visa, these are all their payments. When they're on a systematic path that is eliminating those debts and they free up those payments, do you think, let's say John was the one you got the infinite banking policy on the first time, and they start freeing up their debts. Well, Rebecca should have one too, right? So maybe a year or two later, because look, at the end of 1 year, this would have been their balance. They're 20,000 ahead. I want you to look at that. They're 20,000 ahead with the Money Max account. So that's easily all these debts right here, right? Well, you could easily make another policy for them so that Rebecca has one too. And when you do that, this client is in much better shape. You're freeing up a ton of cash flow. You're making a difference in their life. You're their hero, okay? Now, what's so cool about this too, I've heard this pain point from agents in the field about, not with this program, with other things that they're doing. They set their clients up on a strategy and the clients mess up, or clients get in their own way, or they make bad choices. Our clients get literally coaching from the corporate office, and they also get free upgrades. So once they're a client, we're on version 6, almost version 7 of the program. It's a web-based system that they log into, and they literally stay on path and stay on track, but they also get great coaching. as part of their service to make sure they're using it right. They can have as many coaching sessions as they need. There's a value in that. You in the field know that. Well, imagine if you tried to set up a way for them to do all this and move money from here to there and strategically do things. And they messed up, and every quarter you had to get them back on track. And no, now they have a technology, just like when they're driving down the street and their GPS system says turn left, well, you turn left. And if you don't turn left, it does not shut your car off. It recalculates. With this system, with their cash flow and their finances, it does the same exact thing. So this is a screenshot, okay? I'm not gonna go through this right now, but after this call, you guys have we'll give you access to see it. Again, we're gonna have a demo at the end, but we can also send you a link where you can watch the demo. See that full value, okay? I promise you that the concept and strategy may sound, like, oh, maybe I'm interested in this. Oh my goodness, when you see the demo and how it strategically spits out their plan, and when things change, because things change every day, you can even connect your accounts to it, like much like Quicken or Mint or those budget tools. This is not a budget app. This is an action plan app, but it does connect your accounts. So when you go to the store, grocery store, whatever, and you don't have to connect your accounts, please know that. But if you do and you use it, it's going to show up in your action plan automatically because it is technology and it's connected for you, which is really great. So the value for the client, I hope you see. You get happy clients, you get people that are on the path, you give hope. But for you, there is compensation if you decide to represent this program. That's part of the call to action here, right? Get with the person that invited you, learn more on what that looks like. And literally, you get compensated between $500 to $2,000 for each new client that gets on this program. But please remember, they're gonna want to set up, and we do training on how to set the client up to want to get the cash value contract in place as well, to put it all on steroids. And that just creates a referral machine, like I say there. You'll get compensated for the clients that want to get on their path to get out of debt. You get compensated again if they want to do the right offset account. And then not to mention, you can build an agency off of this if you want to. A lot of people do. And you can build that agency even with realtors, mortgage pros, CPAs, business coaches, other life insurance agents. Some of them are not licensed in the insurance industry, right? So even if they get them on the program as a client, but they want that better offset account, well, that's a bird dog bringing you the business now, right? That's a great referral partnership because they're going to want that offset account. So give it a try. That's really what I want to say to you. Look at that little question in the middle. There's no shortage of people that need this solution. Bring us the case. Let us help you. If you want to be all in and do it yourself, you can get trained on that. If you want to just be a referral partner and split the deal and split it, we can do that too. But that simple question in the middle is so powerful. You put me in the room and you in the room, and they all say, so what do you do for a living? And we all, you say financial services, life insurance, tax-free retirement, setting up states, all that. They hear wah, 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 because we all say that. It's the same stuff. And they say, well, what do you do for a living? I actually have a real special niche, or niche, however you say it. My clients have found a way that they can eliminate all their debt, even that brand new mortgage, in as little as 5 to 7 years without having to change their budget or lifestyle at all. If you want to learn more about that, I'll be glad to help you. Which one you think gets someone thinking differently? I promise you it's me if we're in the same room, okay? And you could be that person too. So I just want to show real quick some cases. This is real, okay? These are my cases that I've done that are powerful. In the last, well, it says 5, this is a little older slide, last 6 months, right? They started as an MMA client. That was my compensation. And this is the life premium that happened from them. Now, I'm not saying this is what you would do. I'm saying it will open up the conversations to do more business and to make a difference and an impact for people. Even this client right here, He's 47 years old. He felt like the money max account, it wasn't right for him, but he loved the idea of the offset account. Now I do feel he'll come back, and once he's using the offset account the right way, he's gonna be like, yeah, you're right, Brian, it's gonna be easier with technology. But he did do the life part, and the rest saw the value in both. I hope that, I don't want that to impress you. I want that to impress upon you, like, okay, maybe there's something here, right? So what we're gonna do is this is I don't know if Murray or Kathy, put the link in the chat, but this is a little link. Feel free to take a snapshot of it also, but really just click it. It's in the chat. Literally click on it, get the demo, right? And get the info to how to take next steps. When you click on that, it's going to ask you, hey, who referred you? Just so we can connect you with the right person. There's some other agents on this call that invited you as well. You don't believe me yet? That's fine. Learn more. You don't believe me yet? The best value I can ever give you is do your own analysis for free. We can show you how to do that. We can show you how easy it is to run it, and use yourself as a test. That's what I did. When I ran myself as a test, I couldn't believe what it's going to do for me. And I've paid off, multiple debts. The most recent mortgage I have, I just bought a house in Zionsville, Indiana, which is where I'm at. My backyard's a cornfield, like the Field of Dreams. It's pretty awesome. But literally, I bought it in January of 2020. Guys, I paid over $100,000 worth of debt already in 2 years. And I'm going to have my mortgage and all my debts done. And I paid off debts before. I've been on this program for years. I've used it for multiple properties. I'm going to be mortgage-free and debt-free in April of 2025, saving over $200,000 of interest just on this property. So use yourself as a test, right? Get plugged in, learn how to incorporate it. We have trainings for agents, how to incorporate it to increase their business. And if you want to build an agency, there may be someone on here that's an MGA, or maybe you're a little IMO or something. There's ways you can build an agency off this, build overrides, have bonus pools for both the money max account side and obviously building your insurance side. It just is wonderful, right? So with that, I think we should, there's some questions, open it up for questions, whatnot.
Great job, Brian. This is Murray. Yeah, so Kathy put the link in the chat. Basically, that link takes you to identify who invited you, and we will hook you up with that person to take the next steps. But awesome job. I got two questions, and we got a great question from Gladys. Go ahead, Kathy. You want to take that question? Is Kathy's?
I could take it.
All right.
Yeah. So she said, why would I need software if I can get a loan, make the payments, and save money without the software? So what do you mean by, well, I'll just answer this. Get a loan, make the payments. So can you pay off debt on your own? Absolutely. Why would I need the properly designed insurance policy if I could just get one online from somebody? Right? I mean, I want you to really think about that, right? Can you get a loan, make the payments, and save money without the software? You can pay off debt on your own. Of course you can. They don't do it. People don't do it, right? It's like, why would you use a GPS system when you can use a map? So the value of the program is the tool itself that's guiding you and showing you how, I promise you, you don't have the mathematical formulas built into it to make the perfect move at the perfect time. But can you pay off debt on your own? Of course you can. You apply more money to principal and the debt will get paid off. Will it be as easy, as efficient, and as mathematically perfect as the money max account? Not in any way.
Excellent question.
Yeah.
Excellent question. Brian, how long is this? I mean, once you got,
I like what that, I don't know if Michael, I think what you said is right. Yeah, glad it's perfect. I hope that helps. But more debt, more choice, and more mistakes. Meaning, like, if you take on more debt and you're going to make more mistakes. You're probably right. Yeah, that's perfect, right?
And how do you know which one to pay off first, right?
Yeah.
If you have more debt. So, Brian, how long is this program? Once you're out of debt, this program is no good, right? You're done.
No. Your program, you have it for life.
For
right?
life.
Yep. And you want to buy more properties. You want to start using it for wealth building, right? You want to show the portfolio planning, whatever. It is your software, and it's a web-based solution that you log into. Good question.
And what is the cost?
The cost of the Money Max account itself is based on the analysis for the client, right? So it's based on how much debt they actually have when they're starting, how much interest they're going to save, because we do guarantee the results. That's something for you as financial service professionals to understand. Guaranteed results. That's a blessing. That's a good thing, right? And so that being said, it's based on how much debt they have, how much interest they're going to save, and the time savings that are guaranteed, right? So on the high end, let's say you have someone that has, one of my clients, 38 properties. He's going to save, millions of dollars of interest. $6,000 is what he paid. Going to be debt free, all 38 properties in 15 years. You think that's a good investment? That's also a tax write-off because it was for his company? Probably. On the very low end, one of my clients, 23 years old, she just graduated college 2 years ago. She had 25-year student loans from credit cards, 25-year student loans 2 years ago. Got her first job out of college, making 40,000. She is debt-free today. Now, she decided to live at home. She had no bills, but I don't think she would have paid off that quickly on her own. She had the tool, and the biggest advice I can give anybody is understand the demo. Understand the demo, which you haven't seen yet. Once you see the demo, it is extremely valuable for if you use it for yourself or your clients. It's valuable. Remember, it's client facing, so they get to use it and stay committed to the very goals and plans you're trying to accomplish for them.
Brian's going to go over this, but Ann asked a great question here, or actually made a comment, which I'd like Brian to elaborate on. One valuable element is you can plan, I'm reading her thing, you can plan projects with the software.
Sorry, Scott Nelson, you're right. I didn't say, so that young lady, I apologize. Thank you, Scott. That young lady, 23 years old, she paid $1,100 for the program. Okay. Now, the clients can also make monthly installment payments on it if they want to. It's not a subscription, so eventually the payments will stop. She's paying $37 a month until it was paid off. She's already paid it all off, right? It's gone. Okay. Most people, Scott, thank you for redirecting me. My ADHD got a hold of me. Most people have a mortgage, maybe two, have some student loans, credit cards, car loans, things like that. Let's say they have $400,000, $500,000 worth of debt because they have a big house or something. Not a big house, right? That's a small house in some states. But they have a mortgage and stuff, and they're in debt. Some will say they're in debt up to the eyeballs, right? They're going to save, let's say, 25 years of their mortgage payments. They're going to save over $200,000 in interest. They're going to wind up spending, and there's an algorithm built into it. They're going to wind up spending between $3,000 and $4,000. Okay, you have to ask yourself: is $3,000 worth saving $200,000 in 25 years of mortgage payments? If you don't think so, I'm confused. I really am. If you don't think so, that means you don't believe that it is what it is yet, right? That same client, if they wanted to, they can literally make a monthly payment and do an installment, about $100 a month, until it's paid off. But the company likes people to pay up front, just like insurance companies do. When they pay annually, they get a little discount, right? When the client pays up front, the company will give them a little discount too. But whatever choice is best for them, the company is fine with. Good question. Thanks, Scott, for getting me back on track.
You want to read that one, Brian, or you want me to read it? Is the way you handle?
Yes, the financial planning capabilities are incredible. And Michael Harris, you're right about what you just said. It's the way you handle marketing and advertising for a business. Would you spend $200,000 to make $1 million? Sign me up. Amen. Amen. And Scott, yes, the planning and the forecasting, that's the biggest value of this program, which is the demo itself. And what I'll probably do, we're going to send you guys a link to watch the demo, but for anybody that wants to stay on, Mary, I think what I'm gonna do is I'm gonna have to like check on my wife for a little bit.
Yeah.
I got a text, but I'll play the recording of that demo. It's the same thing, right?
Okay. Okay.
We'll make it big on my screen, and then I'll come right back. But I think that's probably going to be just fine to do that way.
Okay.
Right? But Tangent, yeah, that's awesome. Tangent, we will. Let's catch up. I hope you're well. It's been a while.
Any other questions before Brian steps? But he'll be back. But any other questions?
And for those that don't know, I apologize. My wife just got pretty ill, so I have to just check on her. I still wanted to do this for you all tonight.
Yeah, thanks for that. We appreciate that very much.
Yep.
Above and beyond the call of duty. All
Yep.
right, why don't you set that up, and Kathy and I will still be here. We can answer questions in the chat. This is very powerful. You don't have to stick around, but this is really the meat and potatoes of how it works. So
Eric Dockery, can you explain again where the money comes from? We'll be happy to meet with you and go through that. Watch this demo, because listen, the money can come from their checking and their savings accounts. Literally their checking and their savings account. They don't need anything else. But if you set up the offset account the right way, it's powerful. Are there any, I think, a couple of my agents, before I share the demo, either Michael Breshears or Paul Bechtold, these are guys that have been in the industry for a very long time. And I don't know if they raise their hand, if they have anything to say. I asked them earlier if maybe they would.
do I need to unmute them or something here?
You would need to, yeah.
Let's see.
Okay, so Paul, yeah, can you unmute him or no? Are you not
allowed to talk. Let's see if Paul, okay.
So
There you go.
Can you guys hear me?
Yep.
Yes, perfect.
All right. So I appreciate speaking to everybody on the call tonight on behalf of Brian. I've been in the debt space here since 2017. I was in the health insurance business before that. When I saw what I could do for my clients, helping them get out of debt, free up their cash flow, and secure their financial future, add to the retirement, it was a no-brainer to me. Okay. I started with an infinite banking platform, which has a cash value life insurance policy hardwired to the plan in order to get them out of debt. And then I met Brian last year and I saw that there was an alternate way to do it, kind of a reverse paradigm where we first get them out of debt, take the freed up cash flow, and then leverage it inside of a higher cash value policy. Okay. What I would encourage all of you to do is stick around and learn, and even after this call tonight, learn about the infinite banking concept. Okay, because it'll revolutionize your life. Where I'm at right now, people I'm talking to the most are mortgage brokers. Why? Because mortgage rates have more than doubled in a relatively short period of time. All those numbers that Brian showed you at 3%, imagine what they are at 6, 7, 8%. Okay, when you go from 3% mortgage to 6% mortgage, you go from a 59.3% principal and interest payment first month to an 83.3% principal and interest payment. When I go to 8%, it goes to almost 91% interest payment in the very first month, as well as a much higher mortgage payment, and as well as a total of interest paid over time that is much, much higher. When you go to 6%, the amount of interest we'll pay is more than the principal balance on the loan. Okay. Where are mortgage brokers at right now? Well, the refinance market has been decimated, right? The interest rates rise. Okay. Refinances go out the window, right? As credit tightens up and the economy becomes more volatile and people fail to qualify for loans, that only hinders the new home buyer as well. So I've had a lot of conversations lately about, hey, Mr. Mortgage Broker, how would you like to be the guy that separates yourself from the competition and not only shows your client how to get into their home or refinance their mortgage, but can also show them how to pay off all their debt in less than 10 years, including that brand new 30-year mortgage. So learning how to have those conversations is paramount, and there's never been a better opportunity right now. Where is somebody better at right now with a rocky stock market, rising interest rates, and escalating inflation? Are they better off trying to grow their assets? Or are they better off to pay their debt off that's carrying high interest rates? To me, it's a no-brainer. All it takes is a little basic education to show people how money and interest really works, and you've got them, and you got the perfect tool to do that. Now, what Brian has proven works very, very well, and I would expect Brian to be our top life insurance salesperson at Gordon Marketing next year. I really do. Because what he says at the right time with his clients, once he gets them set up with the Money Max account, and he starts all of them with their checking and savings account as their offset account, he says, now when the time is right for you and you feel you're ready, how would you like to see a better offset account that builds wealth while you're getting out of debt? If you ask that question to 10 people, how many of them are going to say, well, what do you mean? What do you mean when I'm ready? I'm ready now. What do I have to do to get ready for that? You're going to have all kinds of people that are more than willing to move forward at the right time and want to explore what you're talking about, okay? That's where you should learn the infinite banking concept. If you want to know more, buy the book, Becoming Your Own Banker by Nelson Nash, written over 50 years ago. But it'll revolutionize what you're able to do for your clients along with the Money Max account, okay? I think it's more than a little ironic that people like the Rothschilds and the Rockefellers learned this concept almost 150, 200 years ago, and they ended up in the banking business, okay? That should tell you something about why banks are the largest purchasers of cash value life insurance, more so than the buildings and real estate that they own, which is a statement, because in every city I've ever been, the banks have the biggest buildings and the most buildings in every city. So with that, I'm going to turn back over to you, Murray.
Thank you, Paul. Wow. If that didn't hit you. Now, Paul's been around insurance a while.
Yep.
So he has shared how, I mean, and it wasn't like he was broke as an insurance guy. He was doing very well. But this has really accelerated what he was already doing. And I hope you got something out of that. If you don't understand what infinite banking is, it's just a special cash value life insurance policy that is perfectly calibrated to line up with this. So
yeah, I would like to make an additional comment if I could. So
yeah,
I'm
please.
tag on to the comment that was made by the one person earlier.
Yeah.
For some reason, certain agents or clients look at this and they got to try to find a better way to do it. You don't need to find a better way to do it. It's already been invented. It's been vetted by the insurance companies. It's passed rigorous tests. The fact that it earned an Ernst & Young award should tell you something. You know, and even if you could do it all yourself, why would you want to do that yourself? Okay, I can build my own house. I can even build my own car. Recently, I had a new roof put on. I could do that. I rebuilt my fireplace. I could do that, I suppose, if I want to learn how to do that. But why would I want to do those things when there's experts better equipped to do it much more efficiently and much more cost effectively? Okay. Same thing with getting out of debt. Let's find the most efficient path and the best way to do it, and understand that all the math's already been figured out. We don't need a math lesson. We don't need somebody to show us a better way to do it. If there's a better way to do it, trust me, Skylar Whitman and John Washenko would have figured it out by now.
That's awesome. And you've been nothing but a blessing to me, Paul, and the support that you and Gordon Marketing have given me as an agent has been top notch. So I really do appreciate you and all you've done with us. So.
Yeah, and I would say this, okay, Brian and I have a great relationship. Brian has brought on no less than 5 or 6 new agents here in the last 2 weeks. If this is of interest to you, talk to Brian and see how you can become a part of this and how you can seamlessly tie that life insurance sale into the MMA sale as well, okay? All you need to do is find somebody with debt and somebody willing to share their financial information with you, and I promise you we can deliver that additional sale to you. That's what I specialize in. That's what I do, and that's what I do for Brian every day. And it's just a perfect combination because you don't have to know everything. You got the two best guys here that will show you the best way to maximize that sale.
Perfect.
Awesome.
Thank you.
I got some more hands raised, Brian. You want to set that up? And
Yeah,
good to go.
let's just do two more, and then I want to respect people's time. It's been over an hour, right?
Yep. Edgar wants to say something.
Yeah, Edgar would be good. Edgar's great because he is a person that has been using this program for an extremely long time, and he's an investor, has multiple properties. He's liquid. I won't say what his net worth is. That's not for you to know. If he wants to say, great. But he knows what he's doing in this investment space for real estate. And feel free, Edgar, to share whatever you want about this program and what it's done for you. Thanks for coming on. I didn't know you'd be on tonight. This is awesome.
Hey, thank you, Brian.
Yeah.
Mary, something that Paul said that kind of hit me because I was just dealing with family. You see, I've been able to do things with this program that has helped me get very ahead financially. And now I'm helping my daughter. I'm helping my niece. I'm helping them to understand the power of what they got accessible. But something that Paul said, when Brian gave the example at 3%, that's no longer available
Right.
to nobody. The rates has shot up to 6 and even higher. But understand this, with this tool, whether your interest is 6 or even 8%, because you're accelerating the paying of the debt, the interest that you start with doesn't really impact your finance. Because as you're paying the debt quicker and you're eliminating interest, when you're done paying off the debt, what really matters is what did that debt cost you? And there's a term in mortgages. It's not quite what your rate is, but your effective rate. When you're finished paying off the debt, whatever your actual cost of interest was, divided by the time that it took you to pay it off, turns that 6% rate to a 2% rate. Now, if I told you, buy a house in this market, pay an extra $30,000 to get it, because if you don't bid higher, you're not gonna get it, knowing that you're gonna pay it off in 4 years. That's the story of my niece. They paid additional money to get it. It's a 2-family, and they're gonna pay it off in 4 years. Their effective rate, even though they got a 3.5% rate, is gonna be less than 2%. So that is powerful when you utilize the tool. But anyway, I just wanted to comment on Paul. And just a very quick explanation of why Brian said that what I've done with this program has really done great things, great blessings for my family, myself, my wife, my children, my nieces. I started with this program 15 years ago. 2 years ago, meaning after 13 years of using the program, when I was supposed to pay off one of my 2 mortgages in 14 years, by 13 years, I paid off 3 mortgages, not 1, but 2 additional mortgages that I acquired. So we paid off in 13 years, close to $600,000 of mortgages. Now, some comment was made about, well, why would I want to pay off my debt? Well, one thing that I advise people to do is first use the program to learn how you can pay off debt. Once you pay off your debt, then you can, we said don't refinance, but once you understand how to control your debt, refinance, pull all your money back out and then put that money to work for you again, because guess what? If you paid off your debt in 10 years, The second time around, you'll pay it off in 6 or 7 years.
Right.
And even more so, you can pay it off 3 times. Who cares? We are able right now. I mean, last October, I lost a job. I was making $125,000. It's no secret. My company said, we don't need you anymore. And most cases, a family that loses that kind of income are in distress. They just don't know what to do. When I lost that income, I plugged that into my program. And I was going to be debt free from the one mortgage I got left in maybe another 2.5 years. When I lost that job, it just said, okay, you'll be debt free in 4.3 years, not 2.3, 4.3. I said, okay, that doesn't change much. But this is where the real impact comes. We are right now building our home in Florida, which won't be done for a year, February. We're starting building tomorrow our first duplex of 3 duplexes. When I told my program that I have no income, I got rental income from other properties, 2 properties, only 2 more properties. And I added the new mortgage in February. I added the 1 mortgage for the duplex. But then I said, I want 2 more duplexes. I'm going to add 4 more mortgages to my 1 mortgage, 5 mortgages, over $2 million in mortgages. My program told me that I can pay off that debt in 6.7 years. By the time I turn 67, start collecting Social Security, which I don't need. But by then, in 6.7 years, we will double our assets from 2 million to 4 million, and have over $20,000 a month in discretionary income. And this is with no job. So the tool capability that you're able to explore is something that I could have never dreamt. But as I plugged in the numbers and I looked at the opportunities and I saw what I could do, it makes my decision so much easier, so much comfortable, and so much more focused. And again, I'm going to stop right there because this program has really impacted my whole family's life. Now we're using all of our assets to build policies, infinite banking policies. And Brian knows this, and maybe Mary does, but we're actually lending money. We are a bank. We are issuing mortgages. So it's unlimited possibilities. Once you take control of your debt, then you can turn it around and create opportunities.
Awesome story, Edgar.
Thank you. Lastly, Michael, if you want.
Yeah, Brian, thanks for letting me speak. I agree with everything you said, okay? And I will say everything that Paul said about infinite banking is spot on. And it's been great working with Paul at Gordon Marketing. Edgar, I've heard a lot of stories, same stories from a lot of real estate investors just like you, okay? It's a fabulous program. But one thing I wanted to stress as insurance agents, okay? This is the best door opener you'll ever come across. And it only costs $199 to become an agent, okay? That's it. And you look at it this way. I've been with the companies long, I started same day that Brian did back in 2006. And I will tell you that the program works. All you have to have is a checking account and savings account, $100 positive cash flow, and guaranteed that 15 minutes a month it takes to update it. Okay. And a lot of people can do it in less than 15 minutes. Okay. But if you do those 3 things, it will always work. So what better thing to talk to any client, any new client or even old client that you know they can't mess it up if they want to get out of debt. Okay. Now, it's not just about getting out of debt. Okay. And I have to stress this with everybody. The whole program is designed to increase your discretionary income tremendously without changing your lifestyle or budget. Yes, you want to use it to pay off the bad debt. Okay. You may want to use it to pay off your mortgage, especially if you think you're going to move in the next few years. Okay. But a lot of people, a lot of my clients are like Edgar. They want to use it to create wealth and buy real estate. So you have the flexibility to do whatever you want to do with your goals. So as an insurance agent, I don't care if you do infinite banking. I don't care what product you have. If you come to them with this, you will be a trusted advisor within a 6 to 9 month time frame. And they're likely to listen or buy anything from you that makes sense for their goals. That's what this program is all about. That's what this program gives you. And if you can't sell it, it's just because you can't talk to people, because everybody has a debt issue of some kind. Even rich people want better return on their money. So it was a great presentation, Brian. I know you're going through a lot, but it was one of your best presentations ever. And I want to stress that everything that you said is all right there, particularly for insurance agents. And you can build a huge team of professionals, financial professionals, mortgage brokers, real estate brokers, and those people you can help sell this product, because as an insurance agent, you know how to sell money. Okay. And everyone they bring to you they're just a bird dog for you to bring you insurance policies. So, take a hard look at this, because this will help your business tremendously. Okay.
Thank you.
Wow.
Awesome. So I don't know. It's we can. Anyone have questions? Great. It's been an hour and 20 minutes.
Brian, is this program connected to my Smart Pay clients?
I don't know what that means.
I don't know what that means either. Ayana, you want to clarify that? Ayana Hicks? Are you saying this program you can hook it up to automate your accounts like Quicken with it can connect to your bank accounts and update? I don't think that's what you mean. You have to. Okay. Excellent. Good.
Awesome.
Michael, good job. Yep.
Yeah, that's awesome, Michael. Good.
All right, good. All right.
All right. So yeah, why don't we do this? I mean, looks like, I don't know if do you want to record the demo or
We don't have to record the demo, I guess, but if you come back on, I'll turn it back on.
Yep.
Right. Okay. So I'm going to pause the recording.